Alan, this summer, the yen was at 103 to the dollar, and it has charged up, or rather down, to 116 to the dollar. I know currency markets are extremely liquid and hard to predict, but has the yen gone as far as it can?
Well, it hasn't weakened that much. If you compare it to where it was, say, before the financial crisis, actually we haven't done the round trip. We are still a little stronger than then, right? So it does seem like it could get weaker. It's not unrealistic to see a weaker yen on a trade-weighted basis from here.
Well, the traditional response to that point is to sort of clap your hands about the prospects for Japanese stocks, because a lot of Japanese stocks are big manufacturer exporters. They're helped by a weak yen. So car makers, Canon, on down the line, this should be good news. But should we be sparing a thought here for the beleaguered Japanese consumer who is going to be seeing higher prices because of the weaker currency?
Yeah, I think it's an interesting parallel to what the situation was after World War II. As Japan grew out of its difficult period, it promoted exports and kind of didn't help the consumer much. So everything went to the export economies. Right. Now we're getting a little bit of the same thing, aren't we? We're getting consumption taxes rising.
Yes.
That's hitting the domestic economy, hitting households. They'll go from 8, where they just went up to 8 this year. They're going to go
consumption tax.
The consumption tax, and then they'll go to 10% in October if the Ministry of Finance gets its way. That will be a doubling of it over just a couple of years. It's a lot, and it will hit households. Household consumption, 60% of GDP, and that will eventually translate into company profits, you see.
Right, that's exactly right. So eventually, this has a restricting effect on the very companies we were talking so enthusiastically about just a minute ago.
Yeah.
Right? So is there something the government can do to offset this cycle?
Well, there is some discussion, there has been some discussion of cutting the corporate tax rate in the Abe government. Whether that, certainly the Ministry of Finance doesn't like the idea of cutting any taxes. They love the idea of rebalancing taxes, paying off debt, raising revenues. Cutting corporate tax, not so keen, but it has to be said that Japan has some of the highest corporate tax levels in the world, and in the high 30s. And it is fair to say that they could come down.
So you've painted a great best case scenario for the Japanese market. Weak yen, lower taxes, throw in a little corporate governance reform, you've got the ingredients for a rally.
Yeah.
Thanks, Alan.